Great. Well, thank you so much, Deborah, and thank you to the audience for joining us today. This has been a marathon this week, and I think we're rounding the corner to the final few kilometers anyway. So this session obviously is on FX and liquidity management within a CBDC context, and as central banks around the world continue to research and in some cases invest in central bank digital currencies or CBDCs, we thought it would be beneficial to kind of take stock and explore the priorities of the central banks who are working actively in this space, and more specifically dive also into how we might incorporate novel technological innovations such as things like automated market makers into potential future state CBDC networks. In full transparency, this is of course the very same scope that was aligned with and announced yesterday on Project Mariana, which is a collaboration amongst BIS Innovation Hub centers in Singapore, Switzerland, and the Eurozone, and with Banque de France, SNB, and the MAS as our co-sponsors. And we're very fortunate, of course, to have representation from all three central banks here on stage with me today. Alan, Claudine, and Alex will capably lead us through this discussion, and I'll dive right in. So each of your institutions have spent a tremendous amount of time working in the central bank digital currency space over the past few years, maybe even more than a few. And I'd start to set the stage by asking kind of what are your current priorities for each of your institutions within the CBDC space? And Claudine, I'll start with you.
Thank you, Andrew. Hello to everyone. Well, regarding our work priorities for CBDCs, indeed, Banque de France has engaged in quite a big experimentation program on wholesale CBDC. We have completed 9 experiments. We have 3 ongoing, including a Mariana project. And, well, basically, we identified, I would say, 3 main priorities for the upcoming work. One of which, the first one is really following and accompanying the tokenization of the financial industry, and also, well, providing the safest, what we deem to be the safest settlement asset, which is central bank money, so in a tokenized form. Because there is a risk that we identify that is fragmentation in this tokenized world. So this is our first priority. I would say our second priority is more towards working on interoperability issues to make sure that the introduction of CBDCs does not result in increased fragmentation or does not create fragmentation. Also working on the interoperability not only between CBDCs but also with the existing legacy systems to ensure also a smooth transition in the future. And the third priority is indeed cross-border payments to really apply and implement the G20 priorities. So there are 3 main goals that we want to pursue in the coming months, I would say.
That's great. So, you know, interoperability and kind of in all the dimensions possible that you could consider.
Exactly.
Yeah. So, Alan, we'll go to you next with the flurry of recent announcements from the MAS, obviously Mariana being one of them. I'd love to kind of just unpack some of that and get your sense of the priorities from an MAS perspective.
Well, first of all, thank you, Andrew, and thanks to the audience for coming here. So from a MAS perspective, I guess you heard a number of announcements through the week. 2 specific areas that perhaps was highlighted by our managing director yesterday. One was around solving the issue around atomic settlement. The other one was unlocking the value of a programmable money. So let me just break that down a bit further in terms of what we mean. As we're looking at, I guess, the future of a digital asset economy, one of the key things that we recognize is that it needs a medium of exchange. So that's the driver for us to look at what the potential use cases and the infrastructure behind a digital currency that's used domestically. So while MAS doesn't have a position at this point in time, or rather the assessment is that it's no urgent case for retail CBDC, there is a recognition that's important to understand what are the building blocks, infrastructure behind it, and that's where Project Orchid has come forward. Just look at, let's step aside from the underlying ledger. Let's step aside from the digital currency. What's the purpose? What's the intent of programmable money? So that's one piece. On the cross-border side, very glad to have started the work with first of all with Ubin, but very glad to work with the BIS and other parties with Project Damba. So that's set forward the collaboration and the learnings that's required on topics like FX, liquidity management, which we are taking forward through Project Mariana with the SMB and Banque de France. So I think that area solves a slightly different problem, which is cross-border international settlement. One is perhaps more domestic and focused. So Ubin Plus provides, with the announcement yesterday, provides a framework for engagement as we learn about what we're doing with Project Mariana and FX and liquidity management, as we look at how that fits in with existing payment system as well. So I guess those are the key areas that we're looking at from an MES lens.
Great, thanks, Alan. Alex, SMB's been also very active for many years, Helvetia, Jura, amongst other initiatives. So if you could just expand a little bit on your current kind of thinking and priorities in this space.
Sure. So first of all, I think it's great that there has at least been some turnout to a session of all central bankers, although I'm not sure if people are here just to reserve a seat for the next session, so I will stick around and see.
I'm staying right here.
Good to hear. Obviously I will preface my answer with the statement that compared to what the MES announced with Ubin Plus and Banque de France is doing as part of their second wave of wholesale CBDC experiments, I think our priorities are a bit more narrow, but they follow sort of a carefully thought through and crafted path. And if I just recap a little bit what we've done with Helvetia and Jura, so for Helvetia it was really about sort of building the foundations of our work on wholesale CBDC. So we did basically three things: issue a wholesale CBDC onto a DLT, integrating it with our Swiss RTGS, and then also with the core banking systems of commercial banks and the Swiss National Bank. And then together with the BIS and the BDF on Project Jura was basically a broadening of use cases where we looked at new ways of settling cross-border foreign exchange and tokenized asset transactions. And so I think one of the main contributions actually of Jura was that we could show that yes, it's possible to reap the benefits of DLT and CBDC issued on a shared platform while still retaining the necessary controls for the involved central banks. And so that gave us sort of confidence to also build on this, and that's what we will do with Project Mariana now that we just announced this Tuesday. So the background for this, for us, is basically that one of the limitations of previous projects that we identified is that the trading layer was never integrated into sort of the whole settlement layer on this tokenized value chain. For example, in Project Jura, even though all transactions were basically real value, for example, the exchange rates to settle the FX trades involved, they were agreed on ex ante on an OTC basis. And so I think it's easy to imagine that for a cross-border financial markets infrastructure to reap the benefits of a tokenized setup, the trading layer should actually be integrated with sort of the whole value chain. And so this is our priority with Project Mariana, exploring this together with our partners. And the goal is obviously that when this project is delivered next year, that we sort of have this very end-to-end perspective on how a tokenized cross-border value chain can look like, have a practical understanding, and then take the next steps from there.
Great. So, I mean, all three of you have touched on this concept of interoperability, certainly with existing infrastructures, with trading venues, central bank, wholesale money as a foundational layer for settlement, both domestically and cross-border. So maybe we'll kind of double-click on the cross-border aspects. Obviously, that's a lot of the work that we've done at the BIS is focused primarily on that, and there's several different models that we've written about. But Alan, maybe I'll go to you and sort of go a bit deeper in terms of if you could expand on this notion of multi-CBDC networks. If this Mariana project, how does that differ from something like Dunbar or any of the other projects that have been referenced, and kind of what's the value add from that perspective?
Right. So I think the BIS has helpfully put together a frame of reference, the Model 1, Model 2, and Model 3 of multi-CBDC connectivity. As we embark on these different experimentations, the thought behind that is how do we do this in a way that's scalable? And it's not just something that we need to reset up on a bilateral basis. And I think that's something that the BIS and other colleagues have been very forward-thinking in some of these areas. And the concept, in fact, applies not just for the context of CBDC. I think the work that Andrew and the team has been working on with Nexus, I think is this idea of multilateral, multi-approach, which allows it to scale. So bringing back to Damba, the approach that I guess Damba has enabled is the vision of having a common platform for multiple CBDCs to be able to transact. And the beauty of having a single common ledger is you'll be able to have tokenized assets, in this case CBDCs, be able to transact directly on an atomic basis. So you can settle simultaneously without actually having intermediaries. Of course, there are additional controls that are being discussed as part of Damba. There was being looked at in terms of what the governance of such a network would look like. So the beauty of kind of looking at some of the concepts around decentralization or distributed ledger technology allows some level of independence as independent regulators or central banks to be able to manage some of these controls independently. The other piece is, as we looked at in Damba, was just question around what it means to financial institution. Is it a direct access model or indirect access model? How do you treat additional processes sitting outside of the settlement, core settlement function? Things like sanction screening, for example. How do you do that in a way that allows scalability, but yet respect that individual jurisdictions perhaps have different requirements as far as capital controls, requirements around sanction screening policies, etc. So I think Damba was very helpful in providing that vision, and it's not just conceptual. There were actually prototypes that were developed in real life, so we got to understand what the possibilities were, and with a multi-CBDC approach with Damba, that allows for a future where cross-border settlement could be instantaneous, could be immediate, and potentially at lower cost, supporting and working with existing payment rails.
Thanks, Alan. I see some Slido questions starting to come in, which is fantastic. Unfortunately, I forgot my glasses, so I can't read them yet, but I'll get this sorted out in a second. I mean, touching on some of those remarks, and you know, there's certainly a lot of promise in this technology, but we've talked about some of these nuances and complexities and challenges. And so maybe, Claudine, if you could maybe reflect on what are some of these barriers and challenges. You know, we've touched on maybe governance or access or currency controls, but what's come to mind and what are the key learnings from a Banque de France perspective in terms of the 9 projects or learnings over the past few years?
Well, I think there are quite a few areas that we have identified in the matter. Of course, I mean, having multi-CBDC platforms will certainly be key in the future, because as CBDCs are created around the world, it's really important. There are some platforms to exchange these in an efficient manner, and as Alan explained, the DLT has really proved this potential to have very efficient transaction, and that's going to be really key in terms of improving the efficiency of cross-border payments. I think indeed that control over central bank money is key, and we have to ensure that the technologies really stand to this standard very clearly, because it's key for central banks to control their own money. So governance will be really an issue, and the BIS has been working a lot and pinpointing already these aspects, so to agree on the governance structure. And this will be an important part of the work to ensure that these multilateral platforms work. And they can definitely be a help in terms of enhancing and facilitating liquidity. So one key aspect will also be to explore, as we do in the Mariana project, all the functionalities and the efficiency of having some tools of the decentralized finance, like the automated market maker, because obviously central banks also have to play a role and facilitate liquidity. So definitely challenges, but that will be addressed, not only technical ones, also in terms of governance and surely legal. And I would say another challenge that also we can identify is the resilience. And as these platforms maybe one day will grow bigger, possibly there is systemic risk to be handled. So this will be one issue that will need to be tackled.
Okay, great. I'm trying to kind of tease out some of the related questions from this Slido piece, and we wanted to kind of pivot into a bit more discussion around this AMM concept and specifically how we intend to apply it within the context of this upcoming piece of work that we're all going to be working on together. So, I'll go to each of you in turn here, but our original kind of discussion point was, how could an AMM specifically improve price discovery or utility within a settlement layer, and how does that kind of enable these cross-border use cases to come to life? And then maybe expanding a little bit on some of the content from the Slido piece, it was, what are we thinking about in terms of internal deployments within regulated institutions? So what does that marriage look like within central bank digital currency platforms, but also the ability for commercial banks to access that platform and utilize this new capability? So maybe we'll go to you, Alex, first.
Sure. So I think it's interesting. So I was listening to a panel that Alan was moderating on, I think it was Wednesday. Topic was unlocking TradFi with DeFi, and sort of the sentiment that I got from the discussions there was there seemed to be a consensus that if you want to bring DeFi protocols such as AMM to, let's say, institutional production, the devil really lies in the detail. And I think that resonates very well with our own thinking around the integration of CBDCs with AMM, in that we need to get our hands dirty. We have to build one of these systems ourselves. We have to run experiments in order to sort of really understand whether this interesting technology support our use cases well. As I mentioned before, one of our priorities is to sort of test how we can integrate the trading layer into a tokenized value chain. And of course, this is sort of one of the main promises of an AMM, is that basically you can bring pricing and matching on chain. So in principle, that should generate efficiency gains because you don't have to hop out of the payment and settlement tech stack just to do an FX transaction. Of course, this efficiency also comes at a cost. The cost being that basically price formation in AMM has to sort of be reduced to a set of predefined and rather simple rules. And so it will be very interesting also to see what conclusions Project Mariana, for example, can draw on this question, whether pricing of AMMs can in fact be sophisticated enough to determine exchange rates between CBDCs. And I think we're very excited to partner up with these institutions here to make headway on these questions.
Great. Claudine, do you want to take a run at that?
Well, yes, definitely. I think there are some issues yet to be addressed regarding the, as Alexander mentioned, regarding the efficiency of the algorithm. I think it will be interesting to see its behavior and to ensure that it provides appropriate prices, and that in terms of liquidity, indeed, well, the liquidity will flow and the AMM will be able to match demand and supply in terms of liquidity, but definitely this is something to be explored further on. Obviously, in terms of maybe having some different AMMs, I think it will be important to perhaps have the same kind of standard or way of functioning that is important to be set. And finally, well, in terms of governance, yes, certainly there would need to be a governance to, let's say, frame these. We'll see.
Yeah, operations and access and change management and all the fun stuff. Alan, any other thoughts on that piece?
Yeah, so I think on AMM, one is the business model, whether AMM is actually more efficient for the market. So I think that's something that we need to consider. And as kind of Alex has kind of alluded to, I guess the price movement, if there's a huge skew, what does it change? How does it change trading behavior? Do you batch up a big order? What's the implication on the price? So I think there's a lot of thinking behind that. Not to mention that if you introduce a CBDC rather than, let's say, a commercial bank issued liability that's traded in a direct manner. So I think that's implication there. The other piece is, as we look at the controls that needs to be put in place. Presumably, if you're doing this on AMM, you're running this, let's say, with smart contracts. Let's say, whether it's a public, semi-public, or more open infrastructure. There's a question then: does it lend itself to more, to being more vulnerable from market misconduct, Do you have possibility of front running, for example? So I think those are questions that needs to be looked into as well. I think that there's also the question then about, for example, in the case of AMM, you're enabling a liquidity pool, your liquidity pool tokens, what's the right governance structure for that? Who issues the liquidity pool tokens? If there's a need to, for intervention, for example, there's discussion on having circuit breakers, what's the condition for those circuit breakers to be triggered? Who decides what that looks like? Is it done collectively? Is it done on an individual basis? So I think those are open questions that we hope to uncover. Frankly speaking, AMM for institutions in the regulated space, I think it's still a very novel concept, but hopefully we can uncover through this project what it means in a very meaningful way.
I have one from the audience here, and maybe Alex, I'll go to you with this one. But in terms of, what are we attempting to test or learn in this specific context? FX spot markets obviously transact in the trillions and facilitate price discovery in a pretty significant way as such. So what are we kind of realistically attempting to achieve, or how do we compare what we're going to do from a scalability perspective vis-a-vis the way the markets work today? And I think you might have some thoughts there.
Yeah, so I think obviously the project is experimental in nature, so scalability will at most be sort of a conceptual exercise. What I think we aim to achieve primarily is to really understand the consequences of automating price formation in an AMM. So if you look at, let's say, the foreign exchange interbank market today, of course, there are very sophisticated players interacting to make this happen, and in an AMM you reduce this basically to a set of predefined rules. And it's important to make a distinction between what we do as part of this project, which is building an AMM for central bank digital currency, compared to having an AMM for some other tokens that are issued in the ecosystem, because there are many considerations. The exchange rate is basically a policy determinant as well as a tool, so we have to make sure that whatever is coming out of this piece of tech cannot be exploited in any undesirable way, cannot be attacked in any undesirable way. So I think there is a bit more sort of thinking around these aspects to be done.
Yeah. Understanding sort of those behavioral threat vectors or weaknesses within the models or algorithms. A bunch of questions around timelines, and we did want to kind of just have a discussion around, how we framed all of this work as experimental, and I think we're pretty clear about that. But I'm sure there's some, commercial banks in the room, and I know people's, as they think about their own infrastructure internally within a bank, let's say, how ready are we, or what's the timeline for all of this kind of work, and how what's that runway look like to sort of start to transform internally the ability to integrate or interface with CBDC based systems. So maybe give each just a minute to kind of reflect on what your thoughts are in terms of a forward looking view of that. Claudine, you want to start?
Well, I would say, Andrew, that we have an excellent playground in the EU because we have the pilot regime, which will come into force in March, next year, and which will enable the settlement of tokenized financial assets on a DLT. And possibly use DLT for settlement purposes. So what we would like to do is really to be in a position to offer settlement in central bank money within this pilot regime. And so obviously, technically, we could probably be in a position to do this because we have, through our experiments within Banque de France, we have worked with partners with commercial banks on different experiments using different types of tokenized securities. So technically, we could do this. Of course, we would need, let's say, a framework, probably at the Eurosystem level, and possibly do this in a progressive way and put it into production by first starting with maybe 1 or 2 transactions, and then seeing how this works, and before we can put this into production on a larger scale and also at the Eurosystem level. But I think it will be a very practical ground that we could capitalize on, definitely.
Great. Alex?
So, okay, there's probably a few ways I could answer this question. Let me maybe try like this. So, globally, I think we might be quite some time away from having sort of a globe-encompassing adoption of particularly multi-CBDC arrangements. The simple reason being that there are still many unanswered questions. There is no consensus on what kind of interoperability is to be chosen. But even if you manage to make CBDCs interoperable, there are non-technical questions which need to be addressed around what is the applicable law, how do you align participant groups across CBDCs, and then also details like operating hours, value dates, etc. And ironing out these details will inevitably take time on a global scale. That being said, even if that's intricate on a global scale, I think regionally these things might be addressable much more easily. And so I can very well imagine that there will be sort of regional clusters where adoption has a much shorter runway than on a global scale. So we'll see about that. For the S&B specifically, we're still in an experimental phase, and these experiments cannot be taken as an indication whether we will be issuing a wholesale CBDC or not. I think our key priority is to maintain the stability and security of the Swiss financial market infrastructure, and so that being in a tokenized future or not, that's also why we are still very actively collaborating and working on these issues.
And you're obviously working closely with the operating, SIX in Switzerland, who also I think has a decisive strategy around these pieces too, I guess. So there's definitely you're in the experimental phase, but there's obviously a lot of intention and work being put into progressing through this. Alan, any thoughts on timescale?
Yeah, I think that perhaps one way of looking at it is what's framing it this differently is what would it take to kind of get to a production and a mass rollout. I think a few things, and I think Claudine and Alex have mentioned that. I think interoperability is important. If you're doing this cross-border, obviously you need parties on both sides to have a common view or mutually recognized. For example, how do you treat CBDCs held by commercial banks on both sides? You need to figure out whether you allow a direct access model, indirect access model from both. What's the kind of capital controls on both sides? So I think those things need to be worked out. The technical piece, arguably, we have proven some of these capabilities out respectively, and also outside of this group as well. But I think it's all these other questions that needs to be addressed. If you do this in maybe a smaller scale, I think that's conceivable. But for it to be commercially viable, I think that's a different order. And then there's a quite broader question: is this the most efficient way, or is there a possibility? I think, as Alex has mentioned, for the markets to actually run this, the commercial banks to run this using commercial bank money. I mean, off the back of Project Ubin, for example, there's Patio that has been set up by commercial banks to look at commercializing some of the learnings of commercial bank liability. So the question then is, how does all these different pieces fit in together? So I think it's a combination of technology, business models, and the technical aspects, policy, that really needs to come in together. And I think once those are aligned, maybe we'll start to see some of the pilots happening in a more controlled, specific corridors, and then we'll look at scaling this out. Probably that's how I see this space developing.
Great. So we still have a couple more minutes, so I'll make you guys work a little bit harder here. Now we're going to dive into uncharted territory. But one question that's come up actually is maybe around, so a lot of these are experiments, and by definition, within an innovation hub concept or a research lab, you focus on kind of the functional requirements of the system and the what we're trying to do, and not necessarily all the ugly details of how to do it in the real world. But one of those hows is security. And what are we doing, or what are you doing in your respective work programs to kind of think about the kind of security aspects of a CBDC? Because it's certainly obvious that that non-functional requirement is probably paramount to almost anything, and certainly it's an important component. So I'm not sure if any of you have thought about that. I know the Swiss National Bank has certainly done some work in securing communications and related kind of critical infrastructure stuff. But yeah, it just open it up if any of you have any comments on that question.
I think there are a few pieces to look into. If you look at tech, let's say cyber risk, that presumably if you're looking at smart contracts, for example, if you are developing, let's say the currency layer, the currency itself, digital currency itself. I was attending Stuart Haber's talk earlier on. I think he alluded to this point. Smart contracts are arguably, as with any other any construct in computer science, it's difficult to write, and write probably easy, secure it, and just consider all the different factors, make it secure for all scenarios. I think that's something that needs to evolve, right, on one front. The other piece is then, if you're looking at, I guess, bearer assets, you're looking at tokens, then the question is, how do you secure those assets? What's the custody structure in order to do that? I think some capabilities around smart contract analytics, audit, I think that needs to evolve. On an ongoing basis, then how do you support issues around securing the different the increased surface area of attack? Presumably, if you're running this on an open network, then there's a question then if you're running this on a public blockchain, for example, or even a permission blockchain, then you're dealing with additional nodes, validators. How do you ensure independent nodes are not compromised? Key management needs to be looked into if you're looking at securing those assets. So I think those are areas that we are considering on top of the usual technology and cyber hygiene that needs to be in place in any case for an FMI. Yeah, we welcome any suggestions from the audience here actually, if there are perhaps a more systematic way in which you can approach some of these topics.
Great. I think we'll probably wrap up there. It's been a wonderful discussion. I certainly want to thank my co-panelists, the audience for the great questions, and certainly what I can promise is through the Innovation Hub family and all the central bank research programs and investments into this space, it's going to be a very active and exciting next few years. But it's definitely going to take a bit of time, and we're going to continue to kind of keep our heads down and working towards this exciting new opportunity in central bank digital currency. So thank you so much.
Thank you.
Okay.